Hey guys, Scott here. We're in the middle of a fascinating time in the Bitcoin market, and it's a very unusual opportunity to see what an authentic high volatility bull market looks like playing out in real time. So I want to walk you through the tape back from the previous high and show you the proper way to consider support and resistance in a bull market. So if we look at this is undeniably a classical bull market. At every point that it's looked like it was one and done, back here, back here, back here, it's just blasted past it. It looked like it might have stopped at 2,000. It looked like it might have stopped at 2,500. It looked like it might have stopped here at 4,500. And at 5,000, what do we have? We have just short of 5,000. We have a big outside bar red candle. So what that is the market rejecting these fresh highs. So at this point, if I'm long, I'm thinking, well, I don't know if there's going to be another leg up, but at this point, it becomes prudent to bank some profits. Now, you never want to be going to bet against a bull market like this because it's an amateur thing to do. When we examine out the psychology that's involved in betting against a bull market, most of the time we're just coming up for reasons to get short because we want to be right because we didn't participate in the bull move. So what I mean is that you sold your Bitcoins too early, they get to $5,000, and you're secretly hating on Bitcoin, wishing it'd go down. And that's a really common thing, and it's something that none of us are immune to, especially me. So what you have to be really careful that you're not just trying to be right, which is a terrible way to make money. So we look here, we have an opportunity for the market to go up. This is a failed attempt to drive the market down. But at this point here, the market really should have gone up that day, but it didn't go up, it went down. At this point, if I'm a bull, I'm really wanting to bank some profit. I don't want to be long this market anymore. Okay, now, after a period of one-way traffic, after a period of really easy trading, it's axiomatic that the market tends to make things very difficult. So we call this concept the easy time, hard time concept. So after a period of being really easy to trade, the market is just going to fuck you around most of the time. And so we see this again and again and again. We have a period of easy time, we have a period of hard time. We have a period of easy time, we have a period of hard time, which is very difficult to make money, very difficult to know what the market's going to do, requires higher skill and bigger emotions are in play. So here we've had a period of easy time, we can reasonably expect a period of hard time. Now, what does a period of hard time look like in the context of a runaway bull market? It looks like a high volatility, up, down, scaring the children, chopping people out of their positions. So we see here we have inside bars, we have a lot of lower wicks, we have failed attempts to drive the market up. Viewed in context, what we have here is a choppy mess. There's just no other way to describe it. We have another outside period. Everyone's getting shaken out of their positions. Whenever you see an outside bar with a higher high and a lower low, what that is longs being tricked out of their positions and shorts being tricked out of their positions. So we're experiencing a changing of the guard from people who bought low and sold high. This is people exiting their positions, smart people exiting their positions before they get an even further downtrend. Now, what do we have here? We have signs of downside capitulation, and then we have a complete rejection of that downside capitulation. This is a pretty promising looking thing for the bulls. So if I look at that is a very promising candle, and a buy signal would probably be a retest of this low. So every time you get a significant high, that high will always be retested, almost like 90+% of time. So up here we have a significant high, we have that high retested here. It should have gone on to fresh highs, but it didn't. The fix is in. And we see that same thing in reverse. We have a low here, we have strong buying pressure off the lows, and we have an attempt to drive the market down. Now, one or two things can happen at this point. We can push, the market can keep going down and push down to fresh lows, or if the sellers who are clearly in control cannot push the market down below this level here, the fix is in and it's going to run up. And so we see what happened here. We have a complete rejection of the downside hypothesis. We have an open at the lows, close at the highs, expanded range. So what that tells us is that the downside is being rejected. The bulls control the open and the control the close. The bulls have it on lockdown all day. Okay, we have some more two-sided selling pressure because we have a big move here. We have a move from 29.68 up to 41.06. We have a 30% move in anything in 2 days. You're going to want some people who are happy enough with a 30% return in 2 days, and they're going to want to sell profit. They're going to want to sell and bank profit. So what we can expect is after this period of easy time, we're going to have a period of hard time. So the market is probably not going to make it easy for us at this point. And it's not making it easy for us, but the fix is in. The market has shown that it can't get down below this price here. So this is the line in the sand. We've got very clear guidance at this point. You want to be long. It's a bull market. You want to be long. You want to be long in a bull market. You want to buy on panics. You want to buy retests of strongly bought lows. Everything's lining up, but it's still not completely one way. It's choppy. It's pushing up in a manner that's not a particularly strong trend. If we look here, the up bars are clearly stronger than the down bars. This down bar is small and tiny. This up bar is strong. The down bars are small and tiny with lower wicks. The lower wick indicates a rejection of the market going down. Now, if we look at the length of this bar, the range of this bar is smaller than the previous bar. So it's rallying, but we have another smaller range. It's rallying in a weakening fashion. So at this point, this is a potential point that the market can reverse. If the market reverses here, there's a chance that it's going to retest this high and fall down to retest the bottom of the low, because we have a very nice little micro trend line. At this point, as a Bitcoin bull, I become very nervous. It's not quite panic stations at here. This is even more nervous for the Bitcoin bulls. It would be perfectly appropriate to bank some profit here or jump out of the market altogether. Because what we have is a bigger picture, a higher time frame retest of these highs. This could easily be the end of the whole bull market at this point. And if I'm an objective trader, I'm starting to think about that. Now, at this point, we have nice guidance here. If we break below the low of this low, we're probably going to go down, and go down for at least to test the bottom of its range. So what happens? We go up, but we haven't broken these old highs. So this market is sort of trapped in limbo. And what we can say definitively here is that if it's going to go down, it's going to go down here by breaking the low. So I would want to be short this market if it breaks this point 42.57. Now, it doesn't go down. So we examine in context what that means, and what that means is that this is the perfect place for Bitcoin bears to get short. And even though it was the perfect place, it didn't even break the low of that bar. It went on to make fresh highs. So at that point, I think, well, this was looking like an opportunity for the bears, but the bears are very weak here. There's no selling pressure at all. At this point, I'm thinking that we're probably going to retest these old highs. Now, this is where we come to the meat of the video. So what the correct way to view old highs is as a test. It's a test, pass or fail. So we just look up here. If this market is transitioning into a trading range, we're probably going to see selling pressure out here. Why would we see selling pressure at 5,000? A, it's a round number. B, if we are in a trading range, this is the perfect place to sell. Because don't forget, the optimal thing to do in trading ranges is to sell the highs and buy the lows. That's just what you do. So at this point, I'm expecting a test of 5,000 as being the highest probability, and we have absolutely no idea how that's going to work out. So the way to view it is to think that at 5,000, it's probably a very good sell, because there's people who bought here who've endured all of this back, and there will be, by definition, people who bought up here who are just happy to get their money back and walk away with their money back. There's always people who, after they experience a big scary dip, are happy to just get their money back and be done with that and realize that Bitcoin's not for them. So we can see here that we are testing these old highs. At this point, I'm looking at the fashion of this, and this is a vacuum to old resistance. So basically, we have an extremely high probability of testing 4979 5000. But why would anyone go short here or go short here, knowing that the chances are it's going to get to here anyway? So what happens is that the bears hold off getting short. People hold off banking profits because they're pretty sure it's going to get to here anyway, and they try and time a perfect exit. Now at this point, the market we can discount this a little bit, because it's obvious in any situation like this we're going to have a vacuum to the top of the range. So the vacuum I cover in detail in my price action course, but we're going to get there. Now, we see some selling pressure, like we should. We should see selling pressure towards the top of a trading range. We see a little hidden retest of the highs. If we drop below the lows here, we could easily see a drop. But instead of dropping below the lows, we have a complete rejection, absolute complete rejection of any downside hypothesis. So the implications of this are that yesterday it was perfectly valid to hold a short view, to hold a bearish view. Today that bearish view is just unsustainable. You can't even pretend that it's right. Now we've got a dramatic increase in volatility. We've gone from 4,800 to 54.45 in a day. That's an extraordinary move in a day. So at this point, look at where we closed. We didn't close off the highs, we closed at the highs. So what that tells us is that not a single serious Bitcoin player sold here. They're not going to sell here. They know it's going to go up. It's got probably a 90% chance of going up further the next day. And here, what we have here is, this is still a partial bar, so you can't quite draw too much into it. But we have a big move up, and we have selling pressure starting to come in. So what we have here is a weakening up move, but it's still an up move. Now, if we view the whole thing in context, we have a historic bull market. We have an absolute explosion of volatility. We've gone from 3,000 to nearly 6,000, up 50% from September 17 to now, which is a month. So it's gone up 50% in a month. Now, these type of gains are unsustainable by definition, but at this point, only tourists bet against bull markets. You just should never do it. This is not a market to short. This is a market. If you're not already set in this. If you're holding Bitcoin long, I hold a couple, but not many. You want to keep holding, but if you're a tourist, now is not the day to suddenly decide that you're a Bitcoin investor or that you want to fund your first Bitcoin account. I've had 3 calls in the last couple of days from people who don't know anything about Bitcoin wanting to fund Bitcoin accounts. So that's typically a sign of around the top, but at this stage it looks like we're probably going to get even further gains. So this is an incredibly interesting historic time for Bitcoin, and I'd encourage you to follow this market for a few days because it's just absolutely fascinating. Okay.